Equity benchmark indices BSE Sensex and NSE Nifty ended 0.5% and 0.6% lower respectively last week, as against a 2% gain in the preceding week as Q4 earnings failed to relieve the streets of worries related to a possible US debt default. The losses were led by pharma, oil and gas, metal and auto indices, which dipped 1 to 3% on the NSE during the week. Meanwhile, realty, IT and bank indices were the only pockets that bucked the overall trend and gained up to 1%. The mid and small cap indices too maintained their outperformance over the large caps and closed the week with gains of up to around 1%. Going ahead, analysts believe markets could see a brief correction in the short term after the 6% rise from March 2023 lows. This weakness, they say, will be short-lived, which investors should use to increase their allocation.
From March end to beginning of the April till now, we have seen a good rally from around 16,800 level to 18,400 kind of level. We have seen a good one-sided rally. Now, in the extremely short term, there could be small pullback. Those pullbacks should be considered as an opportunity to accumulate good quality stocks. The interest rate cycle in the US, the FOMC has more or less run through the cycle. We don't think there is going to be much higher interest rate hikes from here. The inflation problem is more or less behind us. In India, we already have, RBI has already paused the interest rate hiking cycle. Eventually, after a small correction, we think that Indian markets are likely to move to a new all-time highs.
In the week ahead, the Q4 results of major companies like BPCL, LIC, Policy Bazar, Nykaa, M&M, Hindalco, Vodafone Idea and Sun Pharma, among others, will remain in focus as the earnings season enters its last leg. Globally, the manufacturing and services PMI data from Japan, Europe, the US and Australia will be tracked. The FOMC's latest minutes, the advanced Q1 GDP estimate and any progress on the debt ceiling deal in the US will be the other crucial triggers this week. That said, technical charts also suggest an overall bullish trend for the markets in the near term.
The broader trend for the Indian benchmark indices continue to remain bullish, while for the shorter term, we see Sensex having a resistance of 63,000 and support of 61,000 level. Similarly, Nifty is facing a barrier of 18,500, whereas the support for the index falls at 18,000 levels.
That said, investors could remain fence-sitters this week. The RBI's decision relating to the Rs 2000 currency notes and the developments with respect to 20% tax collected at source on credit cards for international transactions will be on top of their minds before they decide to invest in markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.